I am going to start over so that Debbie can hit her recording button, so this will be recorded. I'm going to pause and start over. Good morning, and welcome to our class on managing sales tax with QuickBooks. My name is Vickie Ayres. I am the QuickBooks and Quoting Tech Support Specialist for Minutes Matter. I am also a QuickBooks Pro Advisor, certified by Intuit. I also have a design business that I've been operating for over 20 years. I do retail and wholesale clients, and I fabricate, install everything. I design my own treatments and then install them in the customer's home. QuickBooks does a fabulous job of tracking what you owe and when you owe it, as long as you set it up properly. But if it has not been set up properly, remember that you can still figure out where you are at manually and adjust QuickBooks back to that point. A few things to remember about our class today. I will have 3 different company files open at different times today. I'm
muted.
Demonstrating with different years, 08, 09, and 10. For the most part, the screens will look the same with only slight variations, but it doesn't really matter because sales tax works the same in all of them. I just want to be able to pop from one file to the other without opening and closing different companies. That's why I'm using all those different years. One of the companies has a very simple sales tax, just a straight-up state sales tax. The other company will have multiple sales taxes for different geographic regions. And then the last company file that I'm going to show you needs to have its sales tax adjusted. Now, it's very important. I want to make sure that you all know that I am not an accountant. I'm a QuickBooks Pro Advisor. I know how to work within QuickBooks. You should always follow the advice of your accountant. I hope you all have a good one. And you should also check with your local state agency to make sure that these settings that I'm describing are the ones that are appropriate in your state, because I can't know every state's rules for sales tax. But I'm using the typical, what we find to be true most of the time with our clients, and I'll show you those settings in just a few minutes. Now, everybody is welcome to this webinar. It's not just for QuickBooks and Quoting customers. Even though we'll be showing everything in a QuickBooks and Quoting company file, what I'm going to show you will work in any QuickBooks company file. And because QuickBooks, well, sales tax in general can be a very, very complex issue. The setting up is very simple, and then it runs very well after that. But if something has gotten messed up in your QuickBooks company file, sometimes it can be a complex issue. So I don't usually handle tech support questions by email. They will require a tech support session at our hourly rate of only $65 an hour, and that is for QuickBooks and Quoting customers only. After the class today, you will get a link that you can watch it again so that you can kind of really internalize what we're going to show you. And that link will be live for at least 2 weeks. And if you are a QuickBooks and Quoting customer, you'll be able to access that link indefinitely on the private QuickBooks and Quoting community forum. We have a promotion today for everyone. If you already have QuickBooks and Quoting, you can use this promo code to purchase the bundle of courses that we teach online. There's a recorded version of it, and there's 3 courses. The first one is called Synergy. That is the life cycle of a job in QuickBooks, from the estimate all the way to the final payment. How do you generate purchase orders? How do you post your bills in, pay your bills, accept down payments? All of that is covered in that course. The second course is Get Ready, Get Set, Get Customized. And that course takes you through all the fine details of customizing QuickBooks and templates to work exactly like you want to work with your company. And the last course is called Keeping Score, and that course tells you how to use reports and different things to pull data out of QuickBooks after you've been using it for a while in order to get information to make really good decisions about your business. That's actually my favorite class to teach. It's something that's very near and dear to my heart. If you want that promo of half off the course bundle, if you're already a QuickBooks and Quoting customer, you'll use the promo new QBQ, all one word, NEW QBQ, and that will get you half off the course bundle, and that's for a thank you for attending our course today. Now, if you don't have QuickBooks and Quoting yet, you also will be able to buy QuickBooks and Quoting today and get half off on that course bundle. So you can get started with your QuickBooks and your QuickBooks and Quoting with some classes and some training that will really help you a lot. And I also wanted to make a note. Recently, I was told that Best Buy is running QuickBooks and QuickBooks this week, QuickBooks Premier, at just $249. So you might want, that's a pretty good price, and you might want to check with your local Best Buy to see if they have that available. I know a lot of the stores will be running specials on that from now to the end of the year and into January, but that's really the best price I've seen on Premier yet. Now, as I go into showing you the sales tax, I'd like to tell you about QuickBooks and Quoting just a little bit. Some of you already have QuickBooks, but you're not using QuickBooks and Quoting, and I'd like to tell you a little bit about why QuickBooks and Quoting would benefit you even if you've already started using QuickBooks. The chart of accounts that comes with QuickBooks and the item list in QuickBooks is perfectly linked. We set it all up so that they link and they talk to each other and keep track of everything perfectly. And inside of the items, as far as the fabrication items, there's yardage already in there for you to quote with, whether you're a designer or a workroom. You can quote window treatments. We have special designer items in groups so that you can quote quickly for furniture groups, wallpaper, painting jobs, staging and redesign. All of those are already set up in there for you. Now, this part right here where we do the free setup of your QuickBooks company file, people think it's just too good to be true, and they're always surprised when I call them after their purchase and tell them how easy it is. When you purchase QuickBooks and Quoting, you'll be able to send us a one-page form. It's just one page. The questions are all very, very easy, and I will actually set up your company file for you in my office. I'll send it to you by email, and then we'll have an hour appointment on the phone where I get it installed, open it up, show you all the different parts and pieces, and what you still need to do to get it up to date. So that is free with your purchase of QuickBooks and Quoting. And the other big benefit is that when you run a job profit report, the way that we've set up the items and the way that they link to the chart of accounts makes your job profit reports come out right. If you don't use items in QuickBooks, you can't run job profit reports. So that's a really, really big benefit of having all of that QuickBooks and Quoting in there and set up with your items and your chart of accounts. We also offer free email support for the life of your QuickBooks and Quoting, and we also have a free QuickBooks and Quoting private community forum for support. There's a manual that you get with your QuickBooks and Quoting that tells you how to use it and do all the different features that we'll also demonstrate. And there's a monthly QuickBooks and Quoting e-zine that comes out through email. And we also have a free monthly quoting webinar, and that's all included with your QuickBooks and Quoting. Now, if you already have QuickBooks, you can order a standard assisted setup. And what that is that about every 3 to 5 years, you should start a new company file. Just because as data stacks up in QuickBooks, it can start to run slowly. Your data might become messed up or corrupted. And if you start a new company file, you can always go back and look at your old company file. That's very easy to do. And when you order the standard assisted setup, you get the very latest and newest version of QuickBooks and Quoting. If we have made any changes or added any items, you would get the new version of QuickBooks and Quoting and the free hour setup, and all of that is just $75. Now, from now until the end of the year, those will be $75. There is going to be a price increase at the first of the year, but if you want to do a fresh start or a standard assisted setup, you can do that, order that from now to the end of the year for $75. And we can have you completely set up and ready to go with a brand new company file as of the 1st of January. When you do it that way, we set it up with $1 opening balance in your accounts, and then at the first of the year, the last statement that you get in December, you'll just change those dollars to the proper numbers, and then you'll just start working in QuickBooks. And we also offer one-on-one tech support for our customers, and that, as I said before, is just $65 an hour. And a lot of things can be handled in just a half an hour. So there's no reason for you to, beat your head against the wall and get ready to pick your laptop up and throw it through the window. If we could help you with just a half hour of tech support and get you back on your way again. So make sure that you take advantage of all that if you're already a QuickBooks and Quoting and customer. And if you're not, we sure would like to have you join our team, and I could get you set up before the beginning of the year. Debbie, did you have anything else to add to that? I know she's on the webinar, and she might want to say something before we get started with our class today.
Well, I'm glad we have a lot of people to join, and so sales tax is, like you said, a hot topic, and having QuickBooks set up properly is just such a relief to people. We have, since we have instigated, or we brought you on our team, and you've done the one-on-one setups with people that's included with the purchase. That has so changed how people feel about QuickBooks. And guys, I can't stress enough to you, if you don't have QuickBooks and Quoting, it is such a benefit to know that your accounting is set up right. And the reports you can get are phenomenal with it. And now she's not going to be showing reports in this particular seminar today, but during...
We'll take a look at the sales tax liability report, but that will be
exactly,
one.
But that's the only one. But in the course bundle, that one, the keeping score, she shows a lot of those. It's amazing with a few clicks of a button. Vicki, do you want me to launch some of the polls right now?
Yes, that'd be great. We're going to be running a few polls today that will give us a little more information about you as our customer, and I will take a look at those, and if you have any questions, I'll look at those also. Now today we're going to be taking general sales tax questions. You can go into the question area of the dialog box for GoToMeeting and type in your question if you've got something you want to ask about what I've just shown, and Debbie will be helping with those questions, and then she can stop me and I can show you something if I need to show it over again. Now, because of the complexity of people's individual sales tax issues with their company file, or because of their particular state, we won't be taking questions about those specific things to each person, but we will be you can ask any kind of general sales tax questions about setup or the process, and I'm going to show you today. So the very first thing...
Well, and I'm going to close this poll. It looks like we just asked what version of QuickBooks are you currently using, and it looks like just a few are using 2010, so I'm going to close the poll because nope, I've got still, people are just now voting again. All right, I think, more have just voted. Maybe they didn't see it. When I started talking, I see a lot more people are voting now.
That's okay. We can leave it up for a few minutes until everyone gets finished. And
it's really climbing up.
And then, Debbie,
okay.
When I stop for question next, you can let us know what the polls are saying.
Well, we've got other polls. See, I've got to close this poll to start the next poll. So I'm going to go ahead and close this poll.
Okay.
And I can I'll share the results with everybody. It shows how many people are using 2010 and how it looks like a lot of people are using 2009. So we're going to... We
recommend that you upgrade your QuickBooks every 2 to 3 years. You don't want to go any further than that because QuickBooks will stop supporting the older versions of QuickBooks, and then there's no more updates, they don't repair anything, operating systems change, and then QuickBooks will not operate properly. So it's important to keep it up to date. Every 2 to 3 years, get a new version, and depending on what kind of features they brought out with the new one. So let's take a look at confirming your sales tax setup preferences.
Vicki, they can't, not while the poll, they won't let screen sharing happen.
Really?
It's, So we need to let us finish these polls, and we'll go ahead and close this poll and then start the next one. Yes, it says that right on my screen. All right, and we'll share the results here. Do you currently own QuickBooks and Quoting? Looks like about half of you do and half of you don't. Oh, boy, Vicki. All right, so let me get the next poll up here. And if you guys will go ahead and click quickly so we can get started.
See, the poll didn't show for me.
It doesn't? Oh, okay. Well, so you have no wonder you can't see anything. Oh, it's down in your panel. That's why it's not showing, I think. But I'm still seeing. Okay, 85% have voted. Nope, 86. Okay, I'm going to close and share the results. So we have a large, well, it looks like it's kind of divided. Not too, the audience. Okay, this is the last poll. Everybody go ahead and click quickly. How comfortable are you with QuickBooks? Just click on one of those categories. Oh, that's a funny one. I dread opening QuickBooks.
Well, I hope none of my customers answer.
That's right, none of you. All right, so we'll close that poll, and we'll share that it doesn't show any names. We don't know who voted what. We just can kind of see. So.
Well, what I'm excited about that poll is that most people answered, I use it, but wish I knew more. And that's exactly why
62% did.
Which is exactly why we are doing these kinds of classes for free, and then, of course, the ones that we have for that are recorded and that are paid classes because they're much longer and more involved. So you're in the right place if you want to know more. So I think I can go ahead and start the class now,
Yes,
Debbie?
you can. Yes.
All right. So here we have an estimate that's open, and we are going to take a look at our sales tax setup preferences. And where you find those is to go up under your Edit menu, in the menu bar up here, and you want to choose Preferences, which is the very last choice at the bottom. So when we choose that, you can see that there's a lot of things that you can set preferences for over here on the left, and we're going to choose Sales Tax. And then we're going to go to the Company Preferences tab. And the first question, of course, is do you charge sales tax? You want to make sure that that's turned on to yes. And then you want to indicate which is your most common sales tax item. Now, the company file that we're in right now is the complex sales tax setup, the one that has multiple regions and different kinds of sales tax to charge. But the most common one that this person would use is chosen right here. And then, of course, you want to have your taxable item code would be set to tax, and your non-taxable item code would be set to none. Those, I think, come in by default. And 90% of the people that we use, I've only run across, I think, one customer who verified that they were on a accrual basis for tax, sales tax. Most people are on cash basis for sales tax. Now, cash basis or accrual basis for sales taxes is completely different. It's the same wording, but it's different than accounting that is on accrual or cash basis. When sales tax is on a cash basis, all it means is this, is at the moment in time that you have an invoice and there is money or cash associated with that invoice in some way, that then part or all of the sales tax becomes due. So let's say you have an invoice of $1,000 and there's only $500 in cash already received on that as a down payment, and it's associated with that invoice, then only a part of the sales tax, approximately half, a little less than half, would be due on that invoice. The rest of the sales tax wouldn't be due until you got the rest of the cash. So if you create an invoice and there's no down payment and there's no final payment, that invoice will generate sales tax payable in your chart of accounts, but none of it is due yet. It's not due until the date that you owe sales tax based on whether you're monthly, quarterly, or annual. And you would have cash associated with it, and then it would become due. So we're going to take a look at that in a little more detail later, but that's what that little setting means, and most of you will need that to be set to cash basis. And you can find out which way it is by calling your local sales tax agency in wherever you live. Now, when do you pay sales tax? That's very simple. You either are paying and reporting monthly, quarterly, or annually. And I actually have run into a few people who have semi-annual, and what we do is we set them to quarterly so that the setting for the report when you bring it up or in the paid sales tax thing will default to quarter, and then you just change your dates based on when you owe sales tax. So that's how we set up the edit preferences in sales tax. And then you would just say OK. If you made any changes, it would save them. Now, the next thing we're going to do is talk about some definitions. In QuickBooks, you have sales tax items. You have a special kind of sales tax item called a group item. And then we have sales tax codes. Now, your sales tax codes can be found right here under your list menu, sales tax code list. And this is just, these are the different kinds of codes. Now, this code is used on all your products and on your customers. So customers, or your products can be something that is taxable or non-taxable. Quite often, pure labor, such as installation, or a consultation will be non-taxable. And then, of course, hard goods like a hard treatment, hardware, fabric, those would be taxable sales. Now, one thing, if you do call your local sales tax agency, you want to find out a very important thing. If you have an item that you bring in the fabric and then you have labor to manufacture it, is that labor taxable? Most of the time, it's all taxable. The labor, the fabric, the hardware, everything, because you're producing a finished good. And that finished good is kind of like a car. We all know that a car, when you buy a new car, most of the cost in that car is labor. And when you buy the car, you don't get to say, well, I don't want to pay any tax on the labor because labor is not taxable. No, you've received a finished good. You are the end user of that product, so you owe sales tax on the entire product. So make sure and check with your local agency as to whether labor is taxable. It could be that labor would not be taxable in certain situations where it's not associated with any hard good, like a consultation or an installation. Just find out what the rules are in your state, and then you'll need to set up your QuickBooks products to reflect that and make sure that you use them on the invoice in the way that will keep you from paying sales tax or making sure that you collect it when you need to. So sales tax items, let's go to our item list, are at the very bottom of your item list typically. And like I said, in this particular company file, and I'm showing you a complex one, because I want you to understand the difference between those three kinds of things. The code is just the code that we assign to products or people, and the item is the thing that we put onto our estimate that goes onto our invoice that actually creates the charge. So if you have something on your estimate that is taxable, and you have a sales tax item at the bottom that has a rate, it will create the charge for sales tax on that item. Now, individual sales tax items I have right here. We have one for Dutchess County, one for Putnam County, one for Mount Vernon, and so on and so forth. This is a New York City sales tax. This right here, and this is actually a setup that I got from one of our actual clients. She has sales tax like this. She works in Connecticut sometimes, so she charges just one sales tax rate when she's in Connecticut, which is the state, which is 6%. But when she's in, she has a New York sales tax, and when you're in New York, most of the time there is a multiple sales tax. But she could choose just New York, just Connecticut, but all of these other ones that are for the different cities or counties, she has to use the New York state sales tax and a county or city tax. So when she has to do those, she doesn't use these individual sales tax items here. She comes down and uses a sales tax group. You can see over here in the type that these are sales tax items, little individual items, and then these are sales tax groups. So what we did is we set up all of the individual parts and pieces here, all of the individual sales tax items first, one for each place that she needs to collect tax for. Then the sales tax group, I'm going to show you how that setup was done by double-clicking on this. And here is our sales tax group. See, it's been set up as a sales tax group. I gave it a name that looks a little different than the individual sales tax items, so I could easily tell the difference. I gave it a description, and then I put the different things, the individual items, into the group here at the bottom. This is kind of like a little basket. And when we put New York State sales tax into the basket at 4%, and then we put the Dutchess County sales tax into the basket at the bottom, we end up with a composite rate of 8.125%. So when she's working in Dutchess County, this is the item, the sales tax group item, that she needs to use at the bottom of her estimate. So let's say OK there. And you can see that if she's in Mount Vernon, she would use this item at the bottom, and it would create a different composite rate for that customer. And then QuickBooks is going to keep track of all those different things for her, and it does it really, really well. So those are our items, our individual items, and our group sales tax items. And then, of course, the difference between items as these go on to the estimate or invoice, creating sales tax, and then the sales tax code is the label that we give to products or to customers. Debbie, do you have any questions about that so far? She must be busy answering a question. So I'm going to go on to talking about taxable or non-taxable customers. So if we go to our customer center here, we've got a little practice customer, and we're going to open up the setup for that person. And where you set up the tax for this person is on the second tab called the Additional Info tab.
Vicki, I thought I'd interrupt real quick and tell you,
yes.
No, we didn't have any questions. But, guys, if you do, during each segment, as she changes from different companies or different scenarios, topics or scenarios, you can ask questions in between, and we will post those. So we
you have to type those in.
And it takes me a minute to get unmuted because I'm muted. I'm double muted, so I don't want you to hear background noise. So just hang on, I'm coming. All right, I'll mute myself again.
Okay, thank you, Debbie. So here is where we set up this particular customer's tax situation. She is a taxable customer, and she's in Dutchess County. So when we go to create an estimate or an invoice for her, this is the item that will come up automatically for her. Now, when we were in our edit preferences, we chose our most common item. Let's go back there. Was Westchester. So whenever you go to create a new customer in your customer list, Westchester will come up by default. And if you want to have a customer have something else, you just have to come in here and choose the sales tax group for that person. So you want to make sure that if you're using sales tax groups that you choose the group down here if you need a composite rate instead of these little individual items that are at the top. So this client is in Dutchess County, and so we can say OK. And that's how you indicate if it's a taxable or non-taxable customer. Let's take a look at the ABC Design Firm. We'll go to the Additional Info tab, and we can see that they are non-taxable. And we are using the Yonkers City sales tax, which is a composite rate in a group. And we've put in the resale number here. It's really important that if you give someone a non-taxable status, their sales tax exempt status, that you put their resale number in or their tax ID number in there before you give them non-taxable status. Just leave them as taxable until they give you the number. Not having that number in that field, if you get audited, can get you a fine. And they go back a long ways. And in addition to the tax that you will owe if you have given them non-taxable status without having the number on file, and they'll also assess a penalty in most cases. So you want to make sure that if you allow someone to have non-taxable status, that you put the number in at the same time, so that if you were ever audited, you have these numbers available, and you should also have the paperwork on file that you received the number from them. So just make sure that you get that number and you don't give anyone non-taxable status until you do that. Now let's go back into our item list and look at where we give products taxable or non-taxable status. Let's just open up this covered poll. When we open it up, we see the setup for this item, and here is the tax code for that item. It is taxable, and it's set up that way because it would be part of a finished product that a customer is getting, and they have to pay tax on the entire thing. Now, if that's not the case where you are, all you have to do is come into your items and change their status to non-taxable or taxable. But QuickBooks and Quoting will default to taxable because that's what most people's situation is. Now, if an item is set up to taxable and you sell it to someone who has a non-tax status, for example, that ABC Design Firm, their status overrides the code that's associated with the product. So even though your invoice or estimate will say that the product is taxable, if the customer is set up as non-taxable, no tax will be generated based on the customer's code. It takes precedence over whatever the item is, because you have to leave items at what kind of item it is, whether it's taxable or non-taxable, and then allow the customer's setting to decide if they will get taxed or they won't get taxed. So that is the difference between sales tax items, sales tax group items, and sales tax codes, and whether someone is taxable or non-taxable as a customer. Now let's take a look at the kind of reports that you'll use to prepare your return. Now in this particular company file, we're going to take a look at the chart of accounts so I can show you what's going on so far with this company. We have in this company some sales tax payable, $683.06. I created this company specially with only 2 jobs in it that have invoices, so they're generating sales tax payable of $683.06. And so we can go ahead and take a look at the report. That's under Reports menu, Vendors and Payables, and Sales Tax Liability. Now, this particular report, the date is set to 7/1 and 9/30. I'm going to pick this one I created earlier, where the date is set from October 1st to 12/31, just so that I'd make sure and encompass all of the transactions. Now, you can see that in our sales tax payable, it said that there was $683.06. And that is because each one of these invoices created sales tax due on the invoice. Let's take a look at the invoices. Here's one that has sales tax of $341.16, and here's one that has $341.90. So that creates the sales tax payable in the chart of accounts of $683.06. All right? But when we go back to our sales tax liability report that's from October through December of 2009, you can see that it's only $479.15. Now, the reason for that is that one of our jobs is completely paid, and the other job only has the down payment associated with it. So let's go back to see this, create the invoices. This particular job right here, if we click on the history button, you can see that there was one payment of $43.76.22 applied. See right here? Not sure why. Let's put that to $45.49 and 80 cents. Okay, now that one is, there we go. Save and close. Now what that did was it created a balance due on that, and our sales tax liability report now reflects that that was completely paid off. The next invoice has $25.40.06 left due on it because we accepted a down payment on this job of $2,000. And with cash basis sales tax, only a portion of the sales tax is due right now. When we receive the last final payment, let's say we didn't get that until January, the portion of sales tax that's a part of the $25.40.06 would be due in the quarter that January is due. So we've got cash basis showing here in the sales tax liability report that as of this date, in the invoices that are out there with sales tax on them, only the portion of the invoice that has cash associated with it creates sales tax that is due. So sales tax liability that shows up in our chart of accounts will probably be a different number than what is due to the state at that moment in time. And I like to tell people that you can trust QuickBooks to tell you how much you owe and when. When people get really frustrated with sales tax is when they look at a number, for example this one, and say, well, why is that number $6,057.61? If you've got different jobs going, some of them can be at the point where there is an estimate only. There is no invoice yet, so there is no sales tax liability. Or they've got an estimate that they've turned into an invoice that has some sales tax or a down payment associated with it. So there's only a portion of the sales tax that's due right now. And then they've got other jobs that are being paid the final payment that the other part was already covered in a previous quarter. So it's like this big ball of yarn. And for every job that you've got a different string in there. And when you start trying to pull on one string to figure out, you know, how far back and where and when did its sales tax hit QuickBooks and the liability and the payables, you just end up with this big tangled mess it's too complex of an issue to try to figure it all out usually, unless you've only got one or two jobs going, exactly what makes up all of the numbers. So when you look at this report, your non-taxable sales, that's a negative number because we've put this item onto the invoice as a negative amount. It's the way that we recommend that you do down payments, and it creates a smaller number in total sales than you have in taxable sales. So as long as you understand what that relationship is, this is not really a sale yet. The money that is a down payment or an upfront deposit is money that you haven't earned. It's not really a sale yet. So if you were filling out your report, most of the time you will use this number that generates the tax collected as being the total sales or the taxable sales, and then it could also be your total sales number. So let's take a look at how we know that this $249.88 is the proper amount. We're going to click on the calculator, and we're going to type in $6,057.61 times 0.04125 gives us the $249.88. So you can trust that QuickBooks will know what you owe and what the taxable sales are. You just might have to drill down into this number to find out if you have true non-taxable sales or if it's just the down payment money that you need to disregard. So let's double-click and get a quick zoom report on what that $2,000 is. In our case, it's all about down payments. Now, if you were to have another item in here that was a true non-taxable sale, such as consultation time for, $200, then that number could be added back in to this number to get a bigger number for total sales. So let's say it was that you had a $200 item in here that was true non-taxable sales. It would be you would add $200 back to that, and it would be $6257.61 for total sales, and then taxable sales of $6,057.61 at 4.125, and Dutchess County would end up getting the $249.88. Now, this report is nice because it's separating out what our sales and rate and tax collected are for New York State separately from this other geographic area. So we've got those two separated. Now, when I get to the really simple sales tax, it's going to make really a lot of sense to you because you've seen the more complicated one first. Now, this particular line right here can be kind of confusing to people. Well, why does it have this negative number in my total sales and then in my taxable sales and a positive one here? All this line is, you pretty much can completely disregard it because all this number is, or this line is a way for QuickBooks to adjust the fact that you've got sales tax groups that are using total sales plus total sales equals total sales. Well, if you added those together, you would get 8,000. So this is just kind of a working line for QuickBooks so that the numbers at the bottom here for total sales, non-taxable sales, and taxable sales, when it totals up, it comes out properly. It's just kind of an adjusting row for QuickBooks to use. So most of the time you can just kind of disregard that and take your numbers from each line to fill out your form. Debbie, do we have any other questions before I go on? That one is
okay. Yeah, I'm coming.
That's when I get a lot of calls about, in particular, this last line if they're using groups, and then also why this negative number is in here. So did you have any questions?
Well, we have one was Cynthia was asking, how do you record down payments? And I responded, which I'm sure a lot of people are wondering that. We set up preset accounts in our chart of accounts as well as item codes to handle this in QuickBooks and quoting. So that's not something that comes with QuickBooks per se, but it comes with our QuickBooks and quoting. So that is part of our system, and we kind of help you learn how to do that with QuickBooks and quoting. So it's just a little bit different, but it's easy.
Yeah, when you look at things that are written about QuickBooks, and QuickBooks does not have a great way of handling upfront or down payments on jobs. and there's probably, there's maybe five different ways that people handle it. And Debbie and I spent about 6 months working with all of those different methods, talking to accountants, and coming up with a method that we felt was intuitive, that it helped you as far as the way that you're quoting. And it is our recommended method with QuickBooks and quoting, and we cover that in great detail in the class called Synergy. We won't have time to actually do it today. But the method is very nice. You don't have to remember at the end of the job how much you have put down on the job, because we've created a method for QuickBooks to remember that for you. So I've got a job where we did it, and that's why it's coming up that way on the report. So now we've talked about how to use that report, and the simple report for just really simple sales tax, I'm going to show you in the
Vicki, we have a few more questions, so hang on just a minute. And Catherine asked, do you pay sales tax on the down payment?
Not until it turns into an invoice.
Right.
But
that's how we've set it up, too. It has to do with how you and I got it set up in the accounts as well.
You have to have the proper account linked with the proper item linked with the proper accounts in the chart of accounts to have all of that happen right. Now, it's already done automatically in QuickBooks and quoting, but if you start out with just straight up QuickBooks, it does not have it in there. So that's another big advantage for having QuickBooks and quoting and having all of those things done and linked together and just ready to go and use. Now let's take a look at our simple company. We're going to go to the Simply Beautiful Designs company. And in this company, I just switched to the 2009 version of QuickBooks, in case you were wondering which one I was in. And I've got an estimate already up here and ready to go. Now, we're going to not use the upfront deposit item in this one, just to keep it very, very simple. I want the relationship between what we do here and what happens in the background in QuickBooks to be very, very clear, and so I don't want to mix it up at all at this point. We're just going to be doing simple sales tax on one proposal in this company file. So let's take a look at your chart of accounts, and you can see that there's nothing in here. There's no balances at all. There's no sales tax payable, because the estimates that we have in this company file do not generate any accounting. They're what we call non-posting transactions, big, fancy accounting term. But basically what it means is that this right here is in the land of hopes and dreams. It hasn't happened yet. It's not real. So it creates no sales tax liability or payable, because it's still an estimate. So there's $314.92 that eventually is going to become due on this for sales tax, but it won't happen until we create the invoice. So let's go up here to our Create Invoice button. Telling me I don't have enough lining because I didn't populate it with any inventory yet. But now we have an invoice. And it doesn't become a part of QuickBooks until I say Save. So we're going to say Save and New. Now that invoice is in QuickBooks. So if we go back to our chart of accounts now, you can see that we have, we're going to turn off that little business because we want to talk about inventory right now. But we have a receivable. Somebody owes us something, which is $45.1382, and we have a liability, meaning we owe somebody else something, and that's the sales tax, $314.92. So we've got the liability in the payables, and then somebody owes us in the receivables. Let's take a look at what happens when we click on our sales tax, our Pay Sales Tax button. Now, it's extremely important that you never, ever pay sales tax without opening this screen. In QuickBooks and Quoting, we put it right here on the icon bar so that it's easy to find and easy to do. You will also find it under your vendor menu, Sales Tax, and either Manage Sales Tax or Pay Sales Tax. to get there either way. If you run a sales tax liability report, for example, we'll go up here under Vendors, Sales Tax, Manage Sales Tax, and then come to your sales tax liability report. We'll fix our date. Oh, look, there's no sales tax due. But if you were to run this report and then just whip out your checkbook and start writing a check to the Department of Revenue in your state, it will never pay down your payables account in the chart of accounts. It's very, very important to always use this button right here, set your date, in order to pay your sales tax. Now, this says we don't have any sales tax due. And we just saw in our chart of accounts that we did have sales tax payable. The reason is that the invoice was created and it created sales tax payable in our chart of accounts, meaning someday at some point we're going to owe that money. But right this minute we don't owe it because there's no cash associated with that invoice yet. So let's hit cancel here. We're going to go back to our invoice. So here's our invoice. Has the $314.92 down there. And now we're going to accept a payment. We're going to pay this completely off. And the way we're going to do that is go to the payment screen. And we're going to start putting in our customer and pick the wrong living room. And you can see here that that living room, the customer owes $45.13 and 82 cents. So $45.13 and 82 cents. And we want to fill out the rest of this, but it automatically applied it to that invoice. And then we'll say save and close. Well, now the invoice is completely paid. There's a balance due of 0. And when we go to our chart of accounts, you can see that now we no longer have any receivables because nobody owes us anymore. QuickBooks has moved that money over to that special little holding place called undeposited funds. And it's like having the check on your desk and you haven't been to the bank yet. So it's not in the check, it's not at the bank, it's not in your checkbook yet. You might do 3 or 4 of these at one time. They'll all build up here in undeposited funds and wait for you to go to the bank. They won't move to the checking line here until you actually put them onto a deposit slip and they go into the checking account. But, you know, it's not in receivables anymore. Now, the sales tax payable is still exactly the same as it was before because QuickBooks said at some point you're going to owe that money. And then you got the money, and it says, well, you still at some point you're going to have to pay it. So now when we go to our pay the sales tax, fix our date up here. Now it tells us that we owe $314.92 right now, $314.92. And when we click on the little button to pay it, it puts amount paid over here. And of course, we had no money in our bank account, so we have a negative bank balance.
Vicki?
Yeah.
Now, would you show them how to, there's a couple of questions about asking. There you go. That's exactly. Sometimes they're just, states let them round off or round up or round down.
They logged in here just to see that, and I just took this long to get around to it, didn't I?
All right. And then I have another question right after that.
Okay, we'll get to that. So here we've got the $314.92 that we owe. Now, in the state of Indiana, they allow me to have something like 0.00001%, you know, collection allowance, so that they're kind of paying me for, you know, having done them a favor of collecting this and then giving it back to them. We're doing a service for the state. So they allow me to keep just a little bit of that. Maybe it'd be 2 cents in this case. That means that I need to adjust my sales tax. So you want to come in here and make sure that the adjustment date follows the tax due date. Not the check date, but the tax due due date. And here we've got kind of a goofy check date. It should actually be out in like December. But we're going to make the adjustment date follow the tax due date. Then we're going to make sure we have the proper sales tax agency selected here. It will give it its own number. And then we'll make sure we have the vendor selected properly. And then because I'm going to keep 2 cents, this would be called sales tax. I'm just going to start typing it. Adjustment income, because that's going to, that 2 cents that I collected from the customer and that the state is going to allow me to keep would be income to me. So I'm going to choose the income account. And I'm going to reduce my sales tax due by 0.02 cents. And the memo says that it's sales tax adjustment, and we'll say OK. Now what that does is it creates a second line on here that when I click off both of those, it reduces the $314.92 down to $314.90, and all of the accounting is all lined up properly still in QuickBooks for a adjustment that reduced it by 92 cents. Now let's go back and make this a, let's cancel out of that, and we need to go to the company and get rid of that other adjustment. Okay, I'm going to just delete it so that we can go do a different adjustment. So we'll go back to our sales tax. We'll fix our date to 12/1 on this. And then we're going to show the sales tax due through the end of November. And click in there, and it shows us the $314.92. Now this time I'm going to adjust it and say that I'm paying it kind of late, so I've got to pay some interest on it this time. So we'll choose our date to our sales tax period, and we're going to choose an expense account this time. We're going to type in sales tax. Oh, there it is, sales tax adjustment expense. Now remember, if you don't have QuickBooks and quoting, all of these accounts have to be created. They don't come up for you automatically. And there's the sales tax adjustment expense account. And we're going to increase the sales tax this time by $1.32 because we calculated it out on our form that because we're a couple days late, we got to give them a little interest. And then we would say OK. Now that creates the 2 lines. Click them both off. Now that it'll generate a check for $316.24, it will reduce our sales tax payable by the $314.92 and give us an expense of $1.32 under that interest expense. So say OK, that expense account, I'm sorry, and then say OK. Now what's going to happen when we get back to our chart of accounts is you can see that, well, of course, we've got a negative balance in our checking account because we had nothing in there to start with. We've still got that undeposited funds there, but look, there's no payables, sales tax payable. And if you were to run a profit and loss report, you would see the $1.32 as a sales tax adjustment expense. And that is how you handle adjustments that are for discounts, credits, interest, penalties, anything like that. You're just going to go through this main screen and click on the Adjust button. Now this is a great button for slight adjustments that are for those reasons in particular. But we're going to take a look at a company file with a little bit bigger problem in a few minutes. So we've taken this entire job from the estimate. We turned it into an invoice, and then we paid the invoice off. We ran our sales tax to pay using the proper button and the proper screen. If it's not on your icon bar, then it will be under Vendors, Sales Tax, Pay Sales Tax. This is the only way you should allow QuickBooks to generate a check for sales tax. Now we're going to take a look at adjusting sales tax for bigger issues.
Vickie,
now,
let's go ahead and Vickie,
sure.
Let's go ahead and ask these other couple questions I have.
Sure.
This person's wanting to know, and we've had this in our seminars, if they bought something, say at Sam's or Target, and they paid sales tax on it, what do they want? They want to know, do they, and they sell it, of course, they resell it. And so, of course, our QuickBooks is going to try to charge sales tax on that. For me, and I forgot what you said you do, I just let it go. I just let the client pay double sales tax on it, is what I do, just because it's a little more, I don't want to go through any extra trouble, because usually it's not a huge, huge purchase, for one thing.
Well, there's a new way that I just started doing this. Actually, Debbie, I used to do it exactly like you're saying, but some of my clients weren't quite happy with that answer because they just really didn't want to pay it again.
Yeah, but I don't tell them. I don't tell them. That's hidden in my group code. They have no idea where I got that stuff. So.
There is another way to do it. So let's say that you went out to Steinmart and you bought them a lamp and it was $100. I'm not going to actually show it on the screen. I'm just going to talk about it. You bought a lamp for $100, and now you want to charge your customer the $100. But you want to mark it up a little bit, right? So when you put in what you purchased for them, if you were to put in $100 and not mark it up at all, you paid 7% on that, say, for example, so you paid $107 total. You don't put in $107 that they want to pay you back. You only put in $100. And then QuickBooks will calculate that 7%, and you'll be collecting back the 7% inside of what you charge them on the 7%. Now, let me say that again. If you bought a lamp for $100, sell it back to your customer for $100, not for $107. Because when you paid for it, you paid $107. You'll charge $100. QuickBooks will generate the sales tax again, or for you, and you'll end up collecting $107. And it works exactly the same way if you wanted to charge it up to $200. Well, you paid originally $107. Now you're going to charge them $200. So you would get $14 would be generated on your invoice for sales tax, 7 of which is new money, new sales tax, and 7 of which you're just recouping what you paid. So if you've got an invoice and you bought the lamp for $100 and you want to charge $200, it's the same thing. You're just going to be charging the customer for the original sales tax that you've already paid, and you're going to be charging a little bit more sales tax based on what you marked it up, but it's all one transaction. People want to put in, I paid $107, so if I put in $107, it'll create sales tax on top of sales tax, It's just like this vicious circle. Just put in what you paid, not without the sales tax attached to it. Does that make sense, Debbie? She's off and typing someplace, I think.
Oh, I'm here. Yes. And I know you can. It's just I don't usually, most of the time for large purchases, I have a wholesale account. So it is. It's just, yes, you can do that, too.
You can do it that way.
Right, yes.
So,
and I think I have
another question?
Yes, I do. So let's go. And this is Susan asks, I usually pay all the sales tax on a job when the first deposit is made. And that is how I used to do it too, Susan. And she said it keeps me ahead of the curve. What do you think? It makes it so simple. And I understand. I did do that too. But when the larger your jobs get, sometimes it really can hurt your cash flow too as a small business owner. So this deposit method that we have come up with is much nicer, and it keeps you keeping the money for a longer period of time.
If you're using the pay sales tax screen where you're supposed to pay sales tax up here, your settings will tell you how much you need to pay. And either you're going to override that by saying, I want to pay, and see, it's negative amount because we've got other things going on now. I want to pay $800 because I want to pay ahead on what I know I'm going to owe.
Well, no, Vickie, we use cash basis. See, if you're
we're set up for cash basis. We're already set up for cash basis.
Oh,
cash basis means that you will only owe where you've got cash associated with the invoice.
Right. I meant accrual. I was used to be set up on accrual, so it would charge sales tax on the entire amount. Yes.
Yes. And if
I
you
think
set it
that's
up
what she's
under
doing.
accrual, if you set it up under accrual, it will calculate in this screen what you owe based on the invoice that you created and calculate all the sales tax due right now, no matter whether you collected any of it or not.
Right, exactly.
But it can create some kind of goofy things that happen with upfront deposits and invoices and payments. And then things change, and the customer comes back and rounds off the invoice.
Exactly.
It just there are so many other things that can happen between the point in time where you get cash with an invoice or don't get cash that create all kinds of little ups and downs and bubbles in your sales tax. So that we really think that it is better if your state is cash basis, which most of them are, that you remain cash basis and just figure out a system like what we recommend for all of your down payments and figure out a process for putting those through, making your adjustments up or down for collections or penalties, and just this is what we recommend. If your state is accrual, then you just have to do it accrual. There's no question.
Well, no, even if it's accrual, see, in accounting, even the federal government recognizes a down payment. It's not goods you've produced.
Correct. It's not income yet.
So it is legal. It's not income yet. So it really is an upfront deposit. You have not given them any goods, so you are not. That doesn't apply to them. That's what you and I discussed. Just because of the type of products that we produce, we get a down payment, but they don't get anything at that point in time. So you don't have to pay legally.
Not
federal government
income yet.
It's exactly for anything, no matter what. So even if you're under accrual basis for your sales tax, that is still not an invoice yet. It's a payment.
You mean just the down payment money is all
yes.
done?
Yes.
Okay. Yeah.
Yes. Just the down payment.
No, I would not recognize sales tax on a down payment basis only.
Right. All right, let me see if we have one more question, then you can move. I know our time is getting away from us. Several of them have asked a little bit of specific questions. And if you have QuickBooks and quoting, you can certainly post on the forum with some of this, but I don't know if we're going to have time. There is a lot more questions, Vicki, so you go ahead with this next one. I may pick out one or two,
sure.
But we may just have to let the rest go because there all of a sudden is getting quite a few questions.
This next thing that I'm going to talk about, we're going to use our third company file called Super Busy Interiors. And she's so super busy that she let her QuickBooks get a little out of whack. At some point in time, she created a sales tax payment because she was so busy and just sent them off a check for $2,500 because she thought, well, I owe them at least that much money, so I'm just going to get it out of the way and go on to working through my customers. So now she's got negative sales tax. Now, I see this quite often where people have paid more than what QuickBooks has generated that is due in the company file. And sometimes this happens when someone created a new company file and then they wrote a check and it was for sales tax, from before their start date. There's lots of different reasons why to have negative. What I will see a lot of times also is a great big number here. Their company file is maybe 3 years old. They've always just dashed off their checks to the government based on what they calculated from their invoices that they'd received that month, and they just sent the checks off. And so the checks not being properly processed through QuickBooks created a number, say, of $30,000 here. Now, this method that I'm going to show you, it's exactly the same setup, only if you're trying to handle negative sales tax, you will use a sales receipt. If you are trying to reduce a great big number here, bringing it back to a number that you know is true, then you will use a credit memo. But the process and the setup is the same. And I know that a lot of my customers would be uncomfortable with what the setup is that I'm about to show you. It's not in QuickBooks and quoting from the beginning because it's not something that most people need. This is just more of a repair process, and I do this in one-on-one tech support sessions, but I want to show it to you so that you can see how it's done if you're not a QuickBooks and quoting customer or if you're just, interested in seeing what the process is. So the first thing that you would do is create a new account in your chart of accounts called Adjustment Clearing. You can see it's right here. And I'm going to double click on it so you can see the setup. Oh, that brings up the register. We've got to right click and edit it. It is an Other Current Asset Account. Just choose that up there when you choose New Account. We've named it Adjustment Clearing, and I've given a little description here for adjusting sales tax liability. Didn't spell liability right, but we'll let that go for now. And that's all there is to it. You say save and close. The second process is to create a new sales tax code called ADG. So if we go here to our sales tax code list, you can see that I created that ADG for sales tax liability adjustments. And you can see the setup right there. ADG, description, and it is taxable. And then we'll say OK. In your recording link that you get later on, you'll be able to look at this in more detail if I'm going too fast for you right now. Then we're going to create a customer, a new customer, called Accounting Adjustments. And that customer is going to be set up, let's look at the setup, as an ADJ code, tax code, with a tax item called No Tax. And we'll say OK. Now, we have to create a couple of items. One of them was that we have to create an other charge item called Adjustment Clearing. It's an other charge item. We called it Adjustment Clearing Item. We gave it a tax code of ADJ, and we associated it with that account. Remember that first thing we did, the Other Current Asset Account? We'll say OK. Now we have to have a sales tax item called No Tax right there. We right-click and edit that. You can see the setup for that. The sales tax item, an individual item, not a group item, called No Tax. It has a 0% rate, and it is associated with our main sales tax agency vendor. Now, we are going, because we have in our chart of accounts, you can see that we've got negative sales tax, we want to use a sales receipt. Here's our sales receipt. And we're going to start out by creating the sales receipt with our customer accounting adjustments. And then we're going to put an item on here that is the sales tax item that we want to adjust. And in this case, it will be the regular sales tax item, or just our state sales tax item. And the improper amount that happened is $2,500. And then we're going to choose the adjustment clearing item, and it's going to get a negative $2,500. So we end up with a sales receipt with a net result of 0 because we don't want to have to deal with any money that's going to have to come and go in our undeposited funds. But these two items on this sales receipt is going to fix that negative number in the chart of accounts. So this is how you set it up. We had to set up those two items. We had to set up a customer. We had to set up the account that this item right here is associated with, and we had to create a no-tax sales tax code and rate. Now we're going to say save and close. And looky there. Our sales tax now reflects the exact amount that we owe based on the two invoices that are out there. This is all, we knew that we owed $315 and $314, and now it has come back to the proper number, and we fixed this thing that we did at the beginning that was wrong. Okay? Now, I know that there's some of you out there that would like to do that, but you might not feel comfortable doing it on your own. And we can help you make that adjustment and that change in your QuickBooks if it's required. And we can adjust negative sales tax for you, and we can adjust overinflated sales tax payable numbers in your chart of accounts for you. Now, the other thing that you might want to do is to, especially at the beginning of the year, is just to say, okay, that was my old way. That is not quite right. It's not really important to change it at this point because my accountant can get my information out of it. Maybe I want to just start over with QuickBooks and quoting, or if you're already that kind of, one of our customers will do a standard assisted setup for you for just $75. Remember, that price is good to the end of the year. You need to get your order in before the end of the year. And if we can get you set up in December, you can start clean and proper at the first of the year. I think it was Maya Angelou that said, when you know better, you do better. And so what you did in the past is in the past, and it just you can start over with a fresh slate with QuickBooks and quoting. So, Debbie, before we log off here today, we've gone a little long. This is the first time I've taught this class. I thought we could teach it in an hour, but I wanted to, really be clear and careful, so it took us a little over an hour. I appreciate everyone who has stayed and watched the entire thing. Debbie, do we have any other questions?
Well, I'll just make for time's sake, I'll just make a couple comments. That we have had several. What about the recording? Well, I get the recording. We will send the recording in the thank you for attending the webinar. There will be a link, so you'll copy and paste that link into your browser, and you can watch this recording again. And then for up to 2 weeks, that'll be available for everyone that attended the webinar today or that registered. And then it will also be posted indefinitely on the QuickBooks and Quoting forum in our community, so that will be there. Also, several questions that have been asked in this particular webinar are covered in Vickie's monthly webinar. And her next webinar is December the 2nd at the same time, same place. So you guys register for that, and remember, you don't have to be.
It's the first Wednesday.
Right, of every month. It's the first Wednesday of every month at the same time at 1 o'clock Eastern. We do that so you guys can remember. And it's a wonderful thing because you can ask questions there. We do try to respond as much as we can. We have had a lot of questions. Sherry asked a question about use tax. And I don't know if you want to address that quickly or if it's not a quick issue about when, the use tax and when we purchase goods for ourselves, that we don't pay tax on.
There is a report that you can run. It won't look right in this company file because I haven't purchased anything here. But it is purchases by vendor, summary, or detail. And you can run that report, and your vendors will all show up here with amounts next to them. And that way you can kind of go down through it once a month and say, oh, okay, I had $200 here that was for me, and then I had $300 in hardware from this vendor for me. And if you run this report, especially by detail, you can pick out those transactions and just kind of add up what you need to pay use tax on. And then that it would be done with the adjustment button to add tax to something where you didn't actually charge out tax on an invoice. So if you were in the, my icon is gone, there we go. If you were in the adjust button, you would want to say increase the sales tax by, and let's say that you felt like you owed $22 that month, and then you would take and write in use tax here, and then that would, oh, we got to have an adjustment account, and that would be back to an owner's draw, because that's the account that it has to go to, because it's money that's coming out of the company funds and being used for something personal. And then it would come up in this sales tax agency area there. So you just want to run the report that will help you find the transactions and get the amount, and then you want to use the adjust button to raise or lower the check.
And then we had one other question on difference between Premier that we get every single time we do a webinar.
Sure.
You know, it's our famous question between what's the difference between Pro and Premier? Why should I pay more and get one? So if you maybe just 1 minute, maybe we can cover it.
I'm going to go back to my dandy designs. And this is the 2010 QuickBooks. And there's a couple reasons you might want to get 2010. The first one being that you're in 2007. And there are enough really fabulous features in 2010 that I would upgrade if I was in 2007 or 2008 probably. So the first one is you've got an older version and it's time. And the second one is the features that you're going to get. Now, if you're in Premier, you're going to get, when you're in an estimate, a little button that allows you to create a purchase order that will take all of the information that's on your proposal and just push it over onto a purchase order. This is not available in Pro. When you're in Pro, you have to open the purchase order and type in this information again. Choose your items and either copy and paste your edited descriptions or, just retype it. But when you're in Premier, this little button right here that will generate a purchase order. So here you would choose which items you wanted to have go on to this purchase order. And let's say that we were going to put in our fabric on this one and our trim. We would choose those, and then we would probably choose our shipping and say OK. And now our customized description comes right over onto a purchase order. Our items stay matching with our estimate, because that's what we're trying to do through the life cycle of a job in QuickBooks, is keep those items matching from the estimate to the purchase order, to the bill, to the final check or credit card to pay that bill. So that is my number one reason why I would buy Premier, is that little generating of a purchase order from an estimate. I'm not a big company, but I have to keep track of what I've ordered somewhere. So why not keep it all inside of QuickBooks, everything all together, my purchase orders, my estimates, my invoices, all of my accounting and my checking and my credit cards. Everything is available to me to see exactly where I'm at with this chart of accounts. So that would be the second reason. Now in 2010, they have this fabulous new feature that you can add or edit multiple list entries. So we're going to choose this, and let's say that I wanted to work on my non-inventory parts list, my prices here. So here's my non-inventory parts. I could just edit my prices going straight down through that way. If I wanted to look at my service items, these are all my labor items. Again, I can come down here and fix my prices. Now I can add my cost column, and I can see my cost and my selling prices side by side. and I can work my way down through the list. I can copy things down. It works very similar to the way an Excel spreadsheet would. In 2009 or older, you have to open every single one of these items in the item list. Open, edit, close. Open, edit, close. And here in this list or this table, you're able to do it column by column by column and just go through and change your prices that way. It is fabulous. And that is one of the main new features that I've seen in QuickBooks and Quoting in 2010. The other thing that I saw that I really, really liked is in the Customer Center. Here you've got an Attach button. Now, it's not set up in this company file because I just set this company file up in the last couple days. But you can attach documents. You can scan receipts. You can take your Minutes Matter Studio file and attach it to this company or to this customer. And when you're here, you're one click away from looking at all of the files, their fabric files, their picture files, their studio rendering file, any receipts that you might have scanned. Anything that you want to associate right here into this customer information screen, it's available to you with this attach button. It's very cool. So that would be 2010 reasons for upgrade. And the Premier, the two features that I like are generating your purchase order from the estimate. And then, of course, if you're in an estimate, and let's say that you took out the installation, and then when you go to save it, it says you've changed it. Do you want to record it? And you'll say yes. And, of course, that is a goofy message. The change order function is available to you in the Premier Contractors Edition. And this is just an automatic prompt to tell you that if you made a change, it'll tell you what you changed and what happened. And you can actually, customer will install himself. We know we never let them do that, but, you know, this would be a reason for a change. And we are not. You can type whatever you want in this area for the change order, and when you say add, then it pops that right onto your estimate and keeps track of all kinds of changes that happen in the course of a job. You could end up with 3 or 4 different change orders, and instead of tracking them on Post-it notes inside of the file where they just kind of get lost and crumpled and forgotten, you can track them right on your proposal until it's time to create the invoice. So those are my main reasons why I love 2010. Now, do remember that 2010 is not supported by QuickBooks, or I'm sorry, 2009 and older are not supported by QuickBooks in Windows 7.
With
Only
Windows.
QuickBooks 2010 is being supported by Windows 7. So that doesn't mean it doesn't work. It just means that they will not support it. They will not answer questions.
And there could be a few little glitches, which we've kind of run into, I think.
We've discovered a few of them. I am not recommending that you use Windows 7 with anything older than 2010.
I agree. I agree.
It will just create more headaches.
Totally. Guys, so I hope those of you that don't have QuickBooks and Quoting, well, this Vickie and our system that's been set up is fabulous to make QuickBooks so much easier to use. And we offer all kinds of help, and it's free once you get started. And unless you have a detailed sales tax question or you need one-on-one support, which Vickie covered for $65 an hour, we offer that as well. But you got, and with this, the special code, the NEWQBQ promo code for new QBQ that you can use and get the course bundles at half price, it's a perfect thing to do by the end of the year. Everybody wants to start fresh at the first of the year, and even if you weren't doing your accounting exactly right in 2009, 2010's a new year. I think every day is a new day, and you might as well get started the right way. So QuickBooks, you know, it's not something like Vickie said, Ayres, it's a requirement that and it's so much nicer if you feel like your books are in order if you're ever audited. Because think of the horror and how you feel if you've ever been audited. I've been audited a couple of times, not by IRS, but by the state. and you just feel like they're coming in, and you just, even though you feel like you've done everything right, it's still a scary position, and you want to make sure you do have your books in order because you can be audited at any time. Vickie, is there anything else you want to say before we close out?
No, I don't. I hope I see lots of you as my new customers for setups between now and the end of the year. It's going to be a busy time. The appointment times are already tight in November, so you want to make sure and get your orders made and get your appointments set up as quickly as possible so that you'll be ready the first of the year. And I just appreciate everybody coming out today. I hope you enjoyed it as much as I did.
Bye. Thank you, Vickie. You did a great job. Thanks. Bye, everyone.
Thanks, Debbie. We'll talk to you later. Bye-bye.